Technical analysis and fundamental analysis are the two main schools of thought when it comes to analysing the financial markets. Fundamental analysis takes a long-term approach to investing compared to the short-term approach taken by technical analysis. Technical analysis looks at the price movement of a security and uses this data to predict future price movements. It focuses on analysing the stock chart itself for hints into where price may be heading. Fundamental analysis instead looks at economic factors that influence a business. It's based on determining a company's value by looking at its income statement, balance sheet, and cash flow statement. In financial terms, the analysis measures a company's intrinsic value by discounting the value of future projected cash flows to a net present value. A stock price that trades below a company's intrinsic value is considered a good investment opportunity, and vice versa. Successful stock trading will generally be a mix of both technical and fundamental analysis. For example, an investor may use fundamental analysis to identify undervalued stock and use technical analysis to find a specific entry and exit point for that position.